As 2026 has just started, we thought it would be a good time to send out our second vlog about the outlook for global equity investors in the year to come. And just as the Chinese give years names, we thought we'd give 2026 a year, and we're going to call 2026 the year of the robot. So 2025, the year we just left, and the year before that have been years of artificial intelligence, AI stocks dominating equity market returns. So the big American companies have been the fastest rising large equities in the world. Companies like Nvidia, Oracle, Broadcom, many of which we've had in the funds, some of which we still have in the funds. But the problem has arisen with these stocks is the prospects for the amount of money they're going to make out of AI in many years to come are pretty vague. They're pretty hard to pin down when it's going to happen, how profitable it will be, how big the whole market is, how it will divide up. AI is certainly an interesting, fascinating new development, and those people who are really highly involved in it are extremely positive about the advances in computer science which are and the results that they're generating. But what we need to see now as investors are real world products which people are going to use, which people are going to pay for, because the amount of money being invested obviously is huge. The amount of money that people and businesses and governments will pay for AI-based developments is not certain, and how that will be divided up and how profitable that revenue will be is even less certain. So we don't think that the AI stocks, the big AI stocks, are all ridiculously expensive. We don't think we're in a position as we were in 2000, where the largest stocks in the world had share prices which were based on, generally speaking, very little cash flow and sometimes almost no sales. We're not in that sort of bubble, but we are in a speculative phase. And at Goshawk, we're cautious investors, and so we're inclined to move on from stocks whose valuations we find difficult to pin down. Now, the good news, and the reason we call 2026 the year of the robot, is because a lot of AI is about developments in computer science allowing a load of applications to come through, of which robots are the most obvious example. Now, robots have been around since I was a child. My clever elder brother bought Isaac Asimov's iRobot and left it hanging around the house when I was 7 or 8 years old, and science fiction was all the rage in those days. So I read that. I remember it very vaguely. I'm told it was the first book which ever used the word robot. And Asimov invented the 3 laws of robotics. The robots shouldn't kill people. And of course, some people are worried about the AI phase and robots saying that they might kill people now. Also that they should protect themselves and that they should act honestly. So all these laws are being called into question by the developments going on in the world at the moment and are causing some concern. We tend to be rather more optimistic than that. And we look back at the history of robotics in a rather different way and a rather more mundane way. So the big robots that have been produced so far, going back 20 years, have really been large machines which move very large lumps of metal around in a repetitive way to make cars or to make ships, and which can fit things together very accurately, so they end up making extremely good cars and ships. The idea that a handmade car is better than a factory-made car, a robot-made car, is really only for aficionados of vehicles who are prepared to spend time mending these things. Most of us are quite happy with a robot-made car which works and doesn't break down and is, of course, affordable. So, like all technologies, the long-term result of all these technology changes tends to be about producing affordable, everyday, sensible applications. Now, robotics, of course, has moved on from just being about wielding large lumps of metal around. Even over the last 10 years, we've seen robotics coming into areas like microsurgery. So you can have a mini surgical robot being operated and controlled remotely by a professional surgeon, but which is able to do fiddly surgery in things like keyhole surgery, so your recovery time's much quicker, or urinary issues, where the results from robosurgery are much better than the results have been from human surgeons with their big fat hands. So robotics is already proving itself up in new areas. In Japan, which has been the centre of most of the research in robots, most of the developments in robots all the way through the last 25 years, and probably will be going forwards in our view, they had a prize out for many years for the first person who could develop. They had two prizes. One, a team that could win at football with robot footballers. That hasn't yet been claimed, that prize. But the other one was a robot that could peel a boiled egg to put in a lunchbox, in a bento box. And I think that one has now been claimed, or was claimed a year ago. So robots are now much nimbler, they have much finer touch, they can be applied to a range of other industries which have never really been automated before, which food manufacturing, food handling is one of them. There's also a robot recently which has learnt to sew a t-shirt. And again, most t-shirts are still sewed by hand in, what some people regard as sweatshops in Asia. And so, if robotics is coming along to make t-shirt sewing something you can automate, that's another example of the extension of the reach of robotics. And this is really what we're looking for in the year to come. How is AI going to enable robots and automation in general, but also physical automation, to come into new areas and to gain new customers, get more payments for it, in industries which haven't really been automated very much before. Now, there is also on the other side the whole large language model side, which tends to get most of the chat, most of the interest in the press. How AI is going to change search. You can see that happening yourself. You just download the Gemini software or even the OpenAI software, and if you don't want to pay for it, there's a free version, or Perplexity we use a fair bit at work. And you can ask it questions. You can see how impressed you are about the outcomes. We find the improvement in search extremely helpful, but we do notice that there are quite a lot of data glitches in it, and that you need to only use this as a first step in answering any question. You need to go through to what's behind that answer, check that the facts are right, and we do bump into a load of rubbish out there, rubbish in, rubbish out. So the industry on the language side is still suffering from what it calls hallucinations. And certainly before you get to commercialization of AI applications, companies are going to want to know that the data going in is much cleaner than the data is at the moment. They're also going to want to know, if it's their data, that their data is secure. And so cybersecurity companies, where we also invest, are absolutely essential to the commercialization of AI in the year to come. Possibly the robot that will get the most press over the next year is robotaxis. It's quite an interesting development. We don't think it's a massive market, but it is certainly a very high profile one. I mean, basically a robotaxi is a robot driving a car with a load of sensors, which hopefully will spot anyone who might get in the way, who needs to be driven around and not bumped into, but also involving voice recognition software driving the robots. And again, one of the key developments here is, in the past, robots have always needed highly trained coding engineers to set them up and make them run. But the new wave of robots quite often, like the Alexa software and things that Amazon rolled out a few years ago, the idea is that they get to a point where you and I can drive a robot, including the robot I'm talking to now, making this video, but that we can do it using our voice without having to take coding training courses. Anyhow, so as you can see, we still think that inside the broader area of technology change and the applications of AI, there are lots of stocks worth investing in. Fortunately, a lot of these companies, because they're not the chip companies, they strike us as being easier to predict their future. Generally, they're not on the more speculative ratings. They're about mass market, common sense projects and products, rather than very high-end, very esoteric products whose markets aren't even tested or known about, like super general intelligence people talk about in Silicon Valley. Well, we really don't want to place any of our savers' money on these sorts of bets so far out there. There are other fund managers who will do that, but we don't want to do that. We want to stick to nitty-gritty stuff. And we suspect, by the way, that quite a lot of the AI solutions and quite a lot of the applications which will work and which will be affordable will come out of China. China has already shown with the DeepSeek search engine last year that it's capable of producing really quite good results as far as we can see, and at lower cost, lower power consumption, and sponsored by Beijing, who are not to be ignored in this debate. So we have a range of AI investments, but we do think that some of the technology stocks and some parts of the market have become quite speculative. And so we're trying to, that's about a third of the portfolio, might give a broad range of very different exposures in that area. Everything from advanced sensor businesses to actual industrial robots finding new uses, Japanese companies, through to companies which just will make money out of a lot more chips being designed, like Cadence, and made, like TSMC, Taiwan Semiconductors. So our portfolio is built up of stocks which are quite different from the big stocks in the index, but which give us exposure to the same sorts of themes. And then finally, I should say that we're balancing that out because we find the market quite speculative with a range of investments which are about as far away from technology as you can get. So we've got much more more lowly valued investments in companies like European and Asian defence stocks, where defence spending we think will carry on improving, and companies like insurance companies, which are at the other end of the market, modestly valued. We've even started buying companies like Nestle, which have done extremely badly over the last few years as all the market's money has headed off towards exciting growth stocks. It's worth our while, we think, to bear in mind that there are perfectly good solid businesses which just aren't anywhere near the headlines these days, but whose prospects are perfectly reasonable as long as the valuations are fair. And the valuation of Nestle, because the shares have performed quite poorly over the last few years, has now come back to a level where we think it has a solid role in a balanced portfolio like ours. So as ever for 2026, well, not as ever, but this year we do still think that global equities will offer good returns for investors. The hurdle is quite low. Inflation isn't that high at the moment. Interest rates aren't that demanding, but valuations are quite stretched. So we're still looking for the best value for money we can find, a good balance, and we bear in mind that the risks in the market still come from unexpected tweets, mainly out of the White House. Anything can happen, frankly. And so making sure the portfolio is always well balanced. It's always a portfolio where we don't feel something could happen over the weekend and we regret not rebalancing it the week before. You need to keep a step ahead of the crowd on this. Our priority is always, it's never to keep up with a raging bull market. It'd be nice to have another year of a bull market, but we don't mind if we lag a bull market again this year, especially considering how far equity markets have risen over the last 10 and 20 years. Our priority is to make sure we don't give up our gains too quickly if adverse situations or adverse tweets turn out. So that's our positioning for 2026. We're positive, but we're cautious, and we still think that there are plenty of exciting developments in the businesses we have selected for the portfolio. I hope you found that helpful or interesting. Any comments, as ever, we have a website, www.goshawkam.com. Do send us your comments, and thank you very much for listening.
The content of this video is provided for information purposes only and is not intended to be an offer or solicitation, nor is it intended to be investment advice. The funds run by Goshawk Asset Management may have positions in any of the stocks discussed, but their inclusion in this video should not be taken as a recommendation. Historical performance information is presented by way of example only, and this video may contain forward-looking information that is not purely historical in nature, with no representation made that the performance presented will be achieved and no guarantee that any forecast will come to pass. Reliance upon information in this video is at the sole discretion of the viewer. It is not intended to be relied on in making or refraining from making any specific investments or other decisions. Opinions expressed, whether specifically, in general, or both, on the performance of individual securities and in a wider economic context, represent our view at the time of preparation and are subject to change. We hope that's helpful.